Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So welcome, and thank you for joining the session. So as you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So today is quite a day as we start a new week through this December. It's the 11th of December, and we have just about 11 more days, more trading days before we get to the end of the year. So this week will be coupled with quite a number of news, and one of them will be central banks making their interest rate decisions. So we'll be looking at that before we look at the top stories in the market this week, and then we'll do some technical analysis. So from the economic calendar, as you can see, we have quite a number of things happening. Monday is largely a quiet day. Tuesday, we get a speech from Reserve Bank of Australia, Governor Bullock. Then we get jobs data from the UK before we look at the inflation data from the US. So this will be very important. Remember, the Federal Open Market Committee, or the FOMC, which makes decisions for the Federal Reserve Bank of the US, will be meeting this Wednesday, and this is when they'll make a decision on interest rates. So last week we had better than expected non-farm payrolls data, and now we are looking at inflation data. So together, combined, these two data points could tilt the way the Federal Reserve Bank of the US views policy going forward. So out of that will be shared tomorrow. So the big day remains the FOMC day on Wednesday at 10 p.m. And of course, as we continue with the week, you realize that there's even more central banks that are bound to make interest rate decisions later in the week. So first, we'll be having the SNB, or the Swiss National Bank, which is expected to be holding interest rates at the current rate of 1.75%. Remember, the Fed is also expected to hold rates at an upper band of 5.50%. So after the SNB, we also be getting the UK, where the MPC is expected to vote in favor of holding rates at the current level of 5.25%. Of course, we also be getting an interest rate decision from the ECB, or from the European Central Bank, where it's also expected to hold interest rates steady at 4.5%. So clearly, those are four central banks that are bound to make interest rate decisions this week. And I think that would supply the needed volatility in the markets to create opportunities for traders. So going forward for the rest of the week, what should we focus on? So the number one data point to be focusing on will be the claimant count change in the UK at 10 a.m. tomorrow, which will be on Tuesday. Right after listening to a speech from RBA Governor Bullock at 1:20 a.m. Then fast forward to Wednesday, in the morning, we'll be having GDP data from the UK. This is very important. It could move the markets. And of course, we'll be having the core producer price index for the US at 4:30 p.m., right before the FOMC decision. So US crude oil inventories will also be very important on Wednesday. They will show the level of stock by private companies in the US, and these will indicate the direction that the crude oil prices are headed. So higher crude oil inventories basically lead to lower prices. Then if there's a lower than expected inventories, then we could be seeing oil continuing the resurgence. So we also be getting GDP data from the New Zealand on Thursday at 12:45 a.m. Then jobs data from Australia on Thursday at 3:30 a.m. Before now, we look at the three central banks, the SNB, the Bank of England, and the ECB. So later on, we'll get both retail sales and core retail sales from the US at 4:30 p.m. on Thursday. And of course, we'll also be looking at the weekly unemployment claims. So later on at 4:45 p.m. on Thursday, we'll get a speech from ECB, from the European Central Bank, where the ECB president, who is Christine Lagarde, is expected to talk about the interest rate decision that they have made in the in the Eurozone. And investors will be focused more on when the rate cuts are coming and by what quantity the ECB will start with. So then on Friday, we get the S&P Global Manufacturing and Services PMI data. So we'll be starting from early morning with the Australia, then the S&P data will be released for the Japanese economy. Then later on, we will get the same data for the Eurozone, for the UK. And as we approach the end of the day, we also get the same flash manufacturing and services PMI data for the US. So as we approach the end of the week, we also be getting the Empire State Manufacturing Index, industrial production data in the US, capacity utilization rate, and then a speech from Bank of Canada Governor Macklem at 8:25 p.m. on Friday. So clearly, quite a busy week with the majority of the volatility expected to come from the three central banks on Thursday. But then also strong volatility expected on US dollar pairs, and this is on Wednesday when we get the FOMC decision. On Tuesday, we expect some slight volatility coming in from a speech from RBA Governor Bullock at 1:20 a.m. Claimant count change or the number of new people claiming for unemployment insurance for the first time. This will be reported on Tuesday at 10 a.m. Then, of course, the CPI data at 4:30 a.m. 4:30 p.m. So in the afternoon, this is when we'll be getting the inflation data from the US. That's where a majority of the news will be coming from. So besides this, of course, there are other factors that are currently influencing the markets. So I'll be trying to find a highlight from a couple of articles here. So see where I should be starting with. Yes, this is the economic calendar, but it is specially designed for US traders. So clearly on Monday, we have earnings from Casey as well as from Oracle. So that's something we may have missed on the earlier coverage of the economic calendar. Then on Wednesday, we also be having Adobe earnings. Then on Thursday, we have Costco as well as Lena. Lena is the second biggest home construction company in the US. So this will be an important data point for the week, as well as our Costco earnings. Of course, as we approach the end of the week, we'll be looking at Darden restaurants. So besides that, trying to scan real quick here. Of course, there was a Chinese data that came in over the weekend on Saturday. So it was inflation data, and it showed that consumer prices fell by 0.5% year over year in November 2023, steeper than a 0.2% drop in the prior month, and compared with the market forecast of 0.1% fall. So this means that the annual inflation rate in China is now negative 0.5%, which is basically indicative of deflation. So we are seeing consumer prices continue to drop in China as the path to recovery becomes more difficult and difficult. So as a result of this, we have seen the Chinese yuan continue to weaken against the US dollar early this morning. So besides this, I don't know if there's anything more. So the dollar started Monday on the front foot with a reading on US inflation and the Federal Reserve's last policy meeting for the year, likely to set tone for the week, while rising deflationary pressure in China weighed on the yuan. So the greenback pushed above 145 yen and last bought 145.62 yen, reversing some of its steep fall against the Japanese currency rate last week, as bets grew that the Bank of Japan's ultra-low interest rates policy may be nearing an end. So the sterling dipped 0.04% and was huddled near Friday's two-week low of 1.2504. So data on Friday showed US job growth accelerated in November, while the unemployment rate fell to 3.7%, underscoring the resilience of the labor market in the world's largest economy and challenging expectations of imminent rate cuts from the Fed beginning early next year. So I think this is an important data point to notice for the week, that bets on an early rate hike, which is expected in March, were up as much as 60% last week. But then after the non-farm payrolls data, we saw the bets changing, and this is quite something. So on the Fed meeting this Wednesday, we're expecting that the Fed will hold rates at between 5.25% and 5.50%. And the probability is 98.4%. So it's almost 100% probability that the Fed will hold rates at the current level. So the key data point that investors are focusing on is a potential rate cut in March to 5% and 5.25%. And this is something that has been a point of major focus for the better part of the month. So in the last reading last week, this probability was up 60%. But then after the non-farm payrolls data, this probability dropped to 40.2%, indicating that now there's a high probability that the Fed may hold rates again on March. So with this in mind, then as we continue trading for the week, we should know that bets on an early rate cut are becoming scarce and scarce. And now we should be focused on the key data point that is coming before the FOMC press conference, and that is the inflation data. So if inflation happens to drop lower than expected, then in that case, we could be seeing these bets rising. But then if inflation comes in hotter than expected, then these bets could continue dropping, and that will give us a guidance for the rest of the week. So besides that, I don't see anything else that is major in the markets this week. Just trying to scan real quick. Yes. So oil studies after glut fears drove worst losing run since 2018. So oil was extremely bearish last week, and it was quite a huge and record drop. But now we are seeing oil beginning to recover since Friday's performance. So oil edged higher after its longest weekly losing streak in 5 years, driven by signs that supply is starting to run ahead of demand. So global benchmark Brent traded above $76 a barrel after logging several weeks of declines, while West Texas Intermediate was near $72. So a stronger than expected US jobs report and plans to refill the strategic oil petroleum reserve helped crude snap up a 6-day losing streak on Friday. There is a signs of demand, meanwhile, with the busiest year-end travel season expected in the US since 2000. So oil has fallen about a fifth since late September, with even additional output cuts from OPEC Plus and statements by Saudi Arabia and Russia that caps could be extended beyond March, failing to stem the slide. Production from outside the alliance, particularly the US, has been surging. Chinese demand growth is set to slow next year, and there is a chance of a recession in the US. So gains are still somewhat capped into the new week on China's demand concerns, said Yep Junrong, market strategist for IG Asia PTE. So the current price level may prompt some replenishing of the US strategic petroleum reserve stockpile, but whether this marks the true floor for oil prices remains to be seen. So in this case, we are anticipating some form of recovery to be happening in Brent oil prices. So just a moment. Sorry, here. So as you can see, Friday was largely a bullish day for Brent oil prices. And today, the market has basically opened with a strong momentum upwards. And now we are approaching a critical price level And this is something we identified last week. So notice how the market was oscillating between the two trend lines before making a breakout to the lower side and then continuing to drop even lower. So while oil prices were moving further back downwards, we were trying to identify potential points that could be acting as support. And in this case, we identified 74.217 as a key price level. So from the daily chart, this is how it looks like. So now, if I zoom in, you can notice how our price happened to drop and just bounce off the $74.217 per barrel. So we don't have any fundamentals that are basically sticking to the rally that we saw last week on Friday and the continuation we are seeing today. So overall, it seems like China is still slowing down, which is a major consumer of oil. US is expanding production while the OPEC is cutting. So in this case, yes, we had an overextension of prices, quite a big drop here. If you go to the daily, you'll notice that the prices we were seeing here were last seen in the month of June last year. So it's more than a 6 months low that we saw in oil, but now we are seeing a very strong change in direction. So as the oil prices continue moving higher, the key price point here is the previous support, which could be acting as resistance, and this is at 76.784. So what this means is that prices are likely to react to that level, and we need to be ready to take advantage of any opportunities that might come from this. So from the 15 minutes chart, this is how it looks like. So it's more of a chart that has already broken a major level. And if this was the resistance for last week, try and change the trend line here. Okay. So if that was the resistance for last week, then you can see that it was already broken. So now the market is approaching a tipping point at 76.784. And this is the area we observe to see whether the market immediately breaks this area and continues moving higher, or whether it changes direction and moves back downwards. So if at this area we see a strong rejection of higher prices, then we trade lower and target 74.217. But then if the market breaches this level and continues going up, then in this case, the target now becomes $80.837 per barrel of oil. So it's a key decision point that you have to be patient and observe what the price action will show you around this area. So on other markets, if you look at gold, it managed to create a new low and break below 2,000 for the first time in quite a period of time. So now we are seeing gold trading at 1995, the same asset that was trading at 2,183 about a week ago. Just to give you some perspective, the market opened with a crazy volatility on Monday last week. And after going to a new high, all-time high, you can see that the price has dropped over 8.63%. So this is not normal volatility for gold traders. It's not normal. So what we are seeing here is the market moving sideways for an entire week. And then starting up a completely new week with some bearish momentum. But then the current price level seems overextended. So what we are seeing is a very strong bearish momentum after we got to the most recent high. And now with this being the trend, it seems that any pullback towards the upper side present some further short selling opportunities. So perhaps we'll be seeing a retest of this area here. So let me just try and clean this chart. So let's use a smaller time frame. So this is the 15 minutes chart. So let's say that the better part of last week, the market was just trading along this trend line here. And if I use these, then this will be our area to monitor. So from here, you can notice how the market made a break on Friday. And after making this break, remember it was during the non-farm payrolls news. So when it came in with a stronger number than expected, the dollar continued strengthening against other currencies, including gold. So we had a big dump. The market pulled back downwards, and now you can see some further acceleration downwards. So it means that the break is not yet complete, and there's still more room for downside momentum. So we should be now looking for potential target points on lower price levels. So a key level to mark was the previous resistance area here. I would say this was a pretty strong resistance area. Also a resistance here. And now you can see how the market found support here, broke the area retested, and is now moving further back downwards. So in this case, with that in mind, when we look at the next level on this chart, it seems to be somewhere around this area here. So the market is currently already struggling to break this area here, and we could be seeing price bouncing around 1990 and perhaps going back to 2007. So from the 15-minute chart, this is how it looks like. This is our support area, 1990. So if the market happens to be bouncing from here, then a retest of 2007 seems playable, and we could be seeing some further sideways momentum before we get to the real news for the week. So the dollar index has remained strong. You can see the price action on Friday making a recovery of all the losses it had made on Thursday, and today it seems to be continuing with the upwards trajectory. So a very strong dollar index means that we're also seeing a recovery happening on USD JPY, right from Friday's price action to today's price action. And now we have hit yet another decision point. Notice the support area here is now the resistance, 146.211. So it's also a wait and see kind of a scenario to see if the market breaches this level. And if there's further momentum upwards, then we go for 147.236. So if the market happens to reverse from here, then the support is 144.420. So for pound USD, you can see the way the pound is really struggling to make a comeback against the dollar, but the dollar seems to be pretty strong. We hit a major support here on Friday, so perhaps a retest may be in the way, but the idea is at some point we should be seeing the pound continue to rally because we're expecting the Bank of England to keep rates higher for longer. So in this case, we could be seeing the pound make a recovery, and if that happens, then it should provide a necessary buying opportunity for GBP traders. So the trend line may now have adjusted to here. And of course, for this one, there is a new data point. Sorry. So even if you go to the 15-minute chart, then this is how it looks like. So we are basically looking at a bearish channel on pound USD with the market headed higher. And of course, as I mentioned, we are looking for signs to buy because the pound is expected to be stronger. So in this case, potential breakup above this area would represent a buying opportunity. But then if the market faces resistance here, then we could also be seeing a selling opportunity depending on the price action around this area of 1.25606. So for Euro USD, it has been a very strong bearish momentum, and I expect this to continue. So as the dollar index continues being stronger, so is the Euro USD expected to continue being weak. So as of the previous support, we can see the price action level here. So an area where price previously found support. So it seems that one level is working extremely well for us, and that's the support level there. So potentially the market would be looking to break below this area here. So if that break happens, then in this case, we continue seeing some further downside momentum. And now we look on to the next target, which would be around 1.06610. So I expect some further bearish momentum to be happening in Euro USD. especially based on this momentum and price action, where the dollar index seems very strong. So as for USD CAD, now that oil prices are recovering, so is the Canadian dollar. So the potential for the US dollar losing to the Canadian dollar remains significantly high. So now that we failed to reach our target for last week, then this becomes our resistance level. So we are no longer looking forward to that upward momentum. So with oil prices recovering, the Canadian dollar should also be recovering against the dollar. So the potential momentum is back to this support area here at 1.35407. So as for gold, we have already mentioned that there's a strong support around 1990, so potentially bouncing back to 2007 price level. So for AUD/USD, the Australian dollar continues being weak against the dollar after making a strong bounce last week. So Friday's pullback was very important, and now it could be headed further back downwards. And the target remains 0.65284, which was our previous support. And of course, the low of last week. So US equity indices continue recovery. So last week they were pretty strong, and now we are retesting a major resistance level at 16,062 price level for NASDAQ shares. So we already had a breakout last week, and now a pullback, and the market is looking to make a continuation. So if we break above the 16,000 price level, then we could potentially be going for 16,167. So that remains the key target, and that is if we happen to break above this price level of 16,062. So the US30 is currently still trading in a range. So we haven't had any breakout yet. So in this case, it basically means that we remain patient and wait for the eventual breakout. So the breakout hasn't happened yet, so we continue mapping this sideways momentum. So for now, indications show that the Dow may be headed back down in case it remains within the range. With this acting as a resistance, we'll be seeing the market headed towards the lower trend line. So for the US 500, we had a breakout last week on Friday, and now it seems like the market is retesting this area of 45.96 before even heading higher. So in this case, we observe the 45.96 price level to see if there is a strong bounce in price. So as for European equity indices, we are seeing a very strong upwards momentum for the French 40 index. So from the daily chart, this is how it looks like. So the chart is basically approaching another all-time high. And the last time it was here was during the month of April this year. So now with the market looking to break this area, there's a potential you could be seeing an all-time high price in this particular chart. So for the Euro 50 cash index, also a strong bullish momentum, which seems to be losing momentum right now. So you can see that from Friday's close, we have had some sideways momentum, which may be indicative of some weakness in the trend, but then the trend remains strongly bullish. So perhaps we could be seeing investors already betting on the end of the Russia-Ukraine war, which would be extremely bullish for European equities. So for the UK 100, we are seeing a very strong reversal in price action, especially after we hit that resistance last week. So notice how the market managed to cruise above this area here, form a new high, but then after forming the new high, we didn't have much happening above that price. So the market pulled back, and now it's pulling extremely back today. So there's a good likelihood we could be seeing some further downside momentum. And of course, we have quite a number of prices to look forward to. One is Friday's low, and the other one is Thursday's low. So these are two price levels to be watching today. So one, a drop to 75.08, and if the market breaks below that, then some further drop back to 74.75. So that would make a lot more sense. So that's it for the day. Thank you very much, everyone. Let's see if there's any questions. Hi, Kevin. Hi, Masharia. So if they hold interest rate, is that bullish for the dollar or holding interest rates is almost priced in? So apologies. So what we're expecting is a commentary on whether the Fed will be looking to cut rates earlier than expected. So the market is more interested in knowing when the Fed will cut rates and by what number of basis points. So there's an overall consensus that if the Fed cuts rates, it will be cutting by 25 basis points. What we don't know is when the Fed will be cutting rates. So that rate cut could be coming in as early as March next year, or even on proceeding meetings. So in this case, investors will be trying to focus on that commentary rather than on the rate decision itself. So the Fed holding rates steady is already priced in. What we don't have is the commentary on whether they will be more hawkish or dovish. So, well, on one side, we expect Jerome Powell to maintain his usual stance, but as long as inflation is not back to 2%, we are willing to continue the journey and we'll continue holding rates for higher. That would be slightly hawkish. And in that case, it could be stronger for the dollar. But then if he mentions that there's no consideration whatsoever of rate cuts in early 2024, then that will be something that drives the dollar stronger. So on the other hand, if we see some kind of soft stance, let's say the Fed chair saying that they are considering cutting rates, but they are waiting for the next data points, then that might make sense and we could be seeing the dollar bleeding further. So it really depends on the commentary that comes up on Wednesday. How does CNBC strategy work on NASDAQ and is it reliable? I have no idea what CNBC strategy is. I think CNBC is a new site, so I don't know how this correlates. What happened to gold for that week to form the previous week? I think there was some form of uh, short squeeze, people who are short, who are driven to cover their positions as prices continued running higher. And after the short squeeze was over, the market changed direction completely. So sometimes it may happen like that at extreme prices. What drives the Nasdaq market? So the Nasdaq market is basically mostly driven by the top weighted stocks in the Nasdaq. So yes, there's 100 companies that are forming the Nasdaq index, but of course there are companies that have the bigger weights. So if you look at the top 10 stocks on the Nasdaq, they tend to drive the direction of the Nasdaq. So the performance of those individual equities tend to have an impact on the direction of the Nasdaq. So besides this, there's also macroeconomic news and policies, such as the non-farm payrolls, the CPI, the US GDP, retail sales. All that data tends to have an impact on the Nasdaq prices. So on commentary, we expect Powell to regurgitate his famous line, higher for longer and data dependent. Methinks the commentary won't have move an needle, but fundamental news tapering in. The thing is, after the two data points, the non-farm payrolls last week and inflation data report this week, they are bound to change the way the Fed quotes some terms and how it expresses its potential rate decisions. So in this case, any commentary by the Fed on Wednesday is likely to cause some strong volatility in the markets. Do you trade the dollar against other emerging market currencies? For instance, the USD ZAR. Yes, but I majorly focus on the majors, especially due to the spreads and predictable volatility. So potentially we could be seeing major trends emerge for the the emerging currencies, especially if the dollar was to pivot. So if we see signs of a pivot, let's say there is a pivot happening in the US, then that would potentially weaken the dollar, and a weaker dollar would cause some major trends in emerging market currencies, or what we call exotic currencies. So in this case, major trends like USD ZAR could enjoy some good volatility if there was to be signs of a pivot. So since these currencies have lost the most, they stand the most chance to make a stronger recovery against the dollar. What happened to gold for that week to form on the previous week? As I mentioned, there was no major key highlights happening. So sometimes it's leveraged holders basically being driven out of the market in what we may describe as a short squeeze. So if you have an excessively short position on an asset and the price raises, then you make really huge losses. And at some point, you're forced to cover your position. So if it was a short, you're forced to buy back in the market. So previous FOMC data led to market-breaking structures, especially Euro USD. The pair is at 50% of the up move. What is your expectation? Labor data appears to lose its sting to the market, save for inflation. So as I mentioned, there are two key drivers this week. Of course, we have the early CPI data. So in CPI will be a key driver in the market. And then after the CPI, then we get the FOMC. So the FOMC is also expected to be bringing in some good volatility for USD pairs, gold, as well as oil and indices. And then now we move on to the three European central banks that will be reporting their interest rate decision, the SNB, the Bank of England, and the ECB. So when all this happens within the week, then clearly the NFP will have little or no impact in the current week's trading. So my expectation is that the Fed considers holding rates higher for longer, determines that unless something fundamentally changes, they are going to continue holding rates higher. And as a result, we continue seeing the dollar recovery. So that's my projection for the week. The dollar recovery remains sustained. We see equities attempting to reach all-time highs, especially for the Nasdaq and the S&P 500. And of course, the majors will be fighting against a very strong dollar. So unless there's a major positive news across the other economies, then the currencies continue losing to the strong dollar. What makes market structure? The volatility in price and hence the entries in market. I'm assuming this is market. So market structure is basically made of key decision points. These are key turning points in the market. We call them swing highs and swing lows. So it's the comparison of the relationships between the swing highs and swing lows that basically helps us identify a particular market structure. So if markets were moving in one direction, there wouldn't be market structures. But then whenever there's those changes, at one moment price is going up, the next moment price is going down. So that turning point and combined with other similar turning points will help us identify the market structure. So recent BOJ comments on ending the yield curve control have brought in some good speculation, especially concerning the Japanese yen. So they are just talk. We haven't seen any actions yet. So we know, yes, that the YCC program has had major adjustments over the past 1 year, moving from 0.25% plus or minus to 0.5 and then to 1%, and then that 1% being changed to from a hard limit into a flexible target rate, meaning that yields are now allowed to move above 1% for Japanese government bonds. So what this means is that the Bank of Japan is taking, I would say, a significant step in bringing in flexibility to yields in Japanese government bonds. So as a result of this, it seems like there's a very strong desire to move away from the current policy directives of one, the yield curve control program, and two, negative interest rates, and three, the quantitative easing that has been happening in Japan. So we should be seeing the three move in tandem if we are to expect any changes in policy. So on one side, the yield curve control program has been changing. So that one is a positive indicator of what is to come. Two, the quantitative easing has not been reducing, so that this is still something to watch, and interest rates have remained negative for so long. So the hopes for Bank of Japan hiking interest rates are still quite a distant because there are things that need to be done before hiking interest rates. So as a result of that, we continue to assume that the Japanese yen will continue losing to the dollar until there is any fundamental shifts that are actionable immediately. But if this is something that is going to happen within 6 months, 7 months down the line, then it's safe to assume that the current trends continue and the Japanese yen continues losing to the dollar. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session. I really appreciate the questions you raised. They are really good, and the feedback that you gave on the comment section. I appreciate you all. See you guys on the next session.